This is Art Television.
A very good evening. Welcome to Biz RoundUp on another weekend. I'm Ashinsani Veerasinghe. Let's have a look at the headlines first. Sri Lanka's GDP is projected to contract by 1.7% this year, with positive signs of recovery for next year. Cabinet approves to establish export production villages. Government should soon engage in debt reprofiling discussions with the IMF and other lending organizations. Opposition party member stresses. News in detail. Central Bank releasing its report on recent economic developments, highlights of 2020 and prospects for 2021 states that the economic growth is projected to contract by around 1.7% in 2020 compared to 2.3% growth recorded last year. The CBSL also predicts that the economy is expected to grow by around 5% in next year. According to the report, the Sri Lankan economy contracted by 1.6% in the first quarter of 2020 year-on-year as per the provisional estimates of the Department of Census and Statistics. In the meantime, it was noted that the external sector, which was severely affected at the initial stages of the pandemic, marked a notable rebound with an improvement in the trade balance, a revival of workers' remittances, a stable exchange rate, and a reasonable level of official reserves. The external sector stability was supported by the restrictions placed on non-essential imports and selected outflows as well as low global petroleum prices. Meanwhile, the external current account deficit, which is expected to narrow to 1.5% of GDP in 2020, is estimated to increase to 2.4% of GDP in 2021 and decline gradually to 1.2% of GDP by 2025. The CBSL report further added that the government is expected to achieve a budget deficit of 4% of GDP by 2025, along with corresponding improvements in the current account and primary balances. Inflation is expected to be maintained within the desired range of 4 to 6% over the medium term. State Minister of Money, Capital Markets and Public Enterprises Reform, Ajit Niwad Cabral, issuing a special statement, dispels undue fears on Sri Lanka's debt servicing capacity. Accordingly, he further says that the expansion of the fiscal deficit and the increase in debt levels in 2020 should not be generalized as a prolonged debt distress, but rather as a one-off deviation from the clear fiscal consolidation path that has been articulated in the new government's policy framework. State Minister Cabral said that with the spread of the COVID-19 pandemic, all countries, including Sri Lanka, observed a contraction in economic activity, reduction in foreign exchange earnings, decrease in revenue collection, and increase in health and welfare-related expenditure. He further states that the expansion of the fiscal deficit and the increase in debt levels in 2020 should not be generalized as a prolonged debt distress. Cabral added that in terms of growth performance, Sri Lanka is once again set to embark on a growth path following the setback in the first half of 2020 caused by the pandemic. He noted that the expected revitalization of state-owned enterprises, together with the private sector-led growth projects, would also revert the Sri Lankan economy to the high growth path that was observed prior to 2015, whereby annual growth rates of over 6.5% were regularly recorded. Moreover, Cabral also said that Sri Lankan authorities are currently negotiating a loan of $700 million from the China Development Bank, which is expected to be at an interest rate and terms of repayment that are significantly more favorable than the $1 billion sovereign bond that was just repaid. The Central Bank of Sri Lanka states that the headline inflation as measured by the year-on-year change in the Colombo Consumer Price Index remained unchanged at 4% in October 2020, while food inflation decreased to 10% in October 2020 from 11.5% in September 2020. Accordingly, the non-food inflation increased to 1.3% in last month from 0.9% in September 2020. The change in the CCPI measured on an annual average basis decreased marginally by 1 decimal point to 4.6% in October 2020 from 4.7% in September 2020. Monthly change of CCPI recorded at 0.1% in October 2020 was mainly driven by the price increases observed in terms of the food category such as big onion, rice and turmeric powder. However, prices of fresh fruits, chicken and eggs recorded declines during the month. The core inflation, which reflects the underlying inflation in the economy, increased marginally to 3% in October 2020 from 2.9% in September 2020. However, annual average core inflation declined to 3.4% in October 2020 from 3.6% in September 2020. Tourism Minister Prasanna Ranatunga has appointed a 11-member advisory committee comprising private sector stakeholders to fast-track the development in tourism sector and to effectively promote the country's industry in the international domain. Accordingly, the members of the advisory committee are Jetwing Symphony Chairman Hiran Kure, Connaissance de Ceylon Chairman Chandra Vikramasinghe, Shangri-La Hotels Colombo Vice President Timothy Ritt, Santani Wellness Resort founder Vikum Navagamua, Sri Lankan Airlines CEO Vipula Gunathilaka, Ceylon Hotel School Graduates Association past president and executive committee member Trevin Gomez, Daily FT editor and CEO Nistar Kazim, Expedia area manager Savi Godakanda, e-marketing ICEO Rajitha Dahanayaka, and the committee secretary is Ranjit De Silva, while its coordinator is Nimesh Herath. The inaugural meeting of the newly appointed Tourism Advisory Committee took place at the Sri Lanka Institute of Tourism and Hotel Management recently, where industry veteran Hiran Kure was elected as the committee chairman. Addressing the inaugural meeting, Tourism Minister Ranatunga outlined the importance placed by the government led by President Gotabaya Rajapaksa on the tourism sector to boost socio-economic development, including enhancing foreign exchange earnings, income and jobs to local people. He said that tourism has been identified as a thrust sector in the President Rajapaksa's national strategy with a specific goal of achieving 7 million tourists and $10 billion in foreign exchange in the medium to long term. Minister Ranatunga requested the newly appointed committee to draw up a framework and come up with a proposal to open the country for travel again, initially through a travel bubble or travel corridor. In the meantime, Sri Lanka's leading luxury boutique hotel W15 Hanthana Estate is now awarded as the best new and newly renovated hotel by Condé Nast Johansson's, which is the leading reference guide for luxury hotels, spas and venues around the world. W15 Hanthana is the only hotel nominated in this category from Sri Lanka, and the category has covered all hotels in Asia, the Middle East, Africa, Oceania and the Indian Ocean. W15 Hanthana is a newly renovated luxury estate bungalow situated in the hills of Hanthana, close to Kandy. Stay tuned for more news after this short break. Welcome back after the break. The Cabinet approval has been provided to launch the national program on the establishment of export production villages covering areas such as agricultural, fisheries, mechanical and service sectors, allowing these export villages to enter into trade agreements with top-level export companies.
Implementation of an export production villages program has been planned to develop the rural production within a formal enterprises model and link those with the export supply chain and to upgrade the local production industries as import replacements. Thereby, by this program, LT is expected to cluster village-wise companies comprised of similar producers and provide opportunities and provisions for the producers to minimize the issues confronted by them. Furthermore, it has been planned to establish those export production villages covering agricultural, fisheries, mechanical and service sectors and set a sustainable existence of those export villages by entering into further trade agreements with top-level export companies. Accordingly, the Cabinet Ministers approved the resolution furnished by the Minister of Trade, Dr. Bandula Gunawardena, for implementing the said proposed program utilizing the required allocations from Sri Lanka Export Development Board, subject to the guidance of the Ministry of Trade. In 2008, the Cabinet of Ministers decided that the activities of the Spices and Allied Products Marketing Board should be handed over to the Department of Agriculture, and the institution should be closed from July 27th in 2008. Spices and Allied Products Marketing Board is currently under the purview of the State Ministry of Development of Minor Crops including sugarcane, maize, cashew, pepper, cinnamon, clove, beetle-related industries and export promotion. It was noted that a formal mechanism is required to implement the programs identified by the said State Ministry, and the proposal to reactivate the Spices and Allied Products Marketing Board and continue its activities was approved by the Cabinet of Ministers.
Former non-cabinet Minister of Economic Reforms and Public Distribution and Samagi Jana Balawegaya parliamentarian Dr. Harsha De Silva calls the government to soon commence the official discussions with the International Monetary Fund and other international lending organizations for the reprofiling mechanism to settle the due loans. He made these observations addressing a media briefing in Colombo last Wednesday.
ඒක කරන්න පුළුවන් එකම ක්‍රමය තමයි ජාත්‍යන්තර මූල අරමුදලත් එක්ක නිල වශයෙන් සාකච්ඡා ආරම්භ කරලා ඔවුන්ගේ සහයෝගය ලබාගෙන ඒ හරහා ජාත්‍යන්තර වශයෙන් අපට ණය දීපු ආයතන සමග සාකච්ඡා පටන් අරගෙන අපි කියනවා රීප්‍රොෆයිලිං ක්‍රමවේදයකට ගිය යුතුයි. අපිට ගෙවන්න තියෙන ණය පොලියයි වාරිකයයි නොගෙවා ඉන්නව නෙවෙයි, යම්කිසි ප්‍රමාණයක් අඩු කරනවා නෙවෙයි, ඔවුන් සමග සාකච්ඡා කරලා අපි කියනවා අපිට කරුණාකරලා මාස 24ක් එහෙම නැත්නම් මාස 36ක කාලයක් දෙන්න නැවත මේ ගෙවීම් පටන් ගන්න කියලා. අපි දන්නවා ජනාධිපතිතුමා මෝඩි අගමැතිතුමාගේ මේක ඉල්ලලා තියෙනවා. ඒ ඉල්ලලා තියෙන ඉන්දියාවෙන් දීපු ණය සම්බන්ධයෙන්. නමුත් ඒකට තාම යහපත් ප්‍රතිචාරයක් ලැබිලා නැහැ. අපි දන්නවා චීනෙන් මේක ඉල්ලලා තියෙනවා. තාම මේකට යහපත් ප්‍රතිචාරයක් ලැබිලා නැහැ. නමුත් ඉන්දියාවෙන් හා චීනෙන් ගත්ත ද්විපාර්ශ්වික ණය වලට වඩා විශාල ලෙස අපිට අභියෝගයේ තියෙන්නේ ජාත්‍යන්තර ස්වෛරී බැඳුම් කර හරහා ගත්ත ණය. ඉතින් ඒ නිසා ඒ සාකච්ඡාව පටන් ගත යුතුයි කියන එක තමයි අපි වාකිය යුතු විපක්ෂයක් හැටියට මේ අවස්ථාවේදී අපි කියන්නේ.
The European Union First Councillor who heads Political, Trade and Communications section, Thorsten Borgfred, stresses that Sri Lanka's move to restrict imports is not the ideal decision, especially on the country's aspiration to become a regional trading hub.
Explaining the issue in detail, the European Union First Councillor, who is also the head of Political, Trade and Communications section, Thorsten Borgfred, stressed that the imposing tariffs on key industries to defend domestic industries is not assisting the long-term competitiveness, as without feeling market pressure, the productivity tends to contract. Highlighting that a regional trading hub is one that allows the easy flow of goods both in and out, Borgfred said the EU believes that the current import restriction might work well for Sri Lanka in the short term, as there is a need to protect the currency. Nevertheless, he said in the long term the decision would lead to negative effects, since over time it can reduce the attractiveness to European investors and lead to uncertainty. The head of European Union Trade also noted that Sri Lanka's ability to pay for its imports from the Asian region from the foreign exchange earned by exporting 2/3 of its total export basket to the EU, US and UK is something to think about. Moreover, he also noted that even though it is unfortunate that Sri Lanka has been reclassified as a lower middle income country, the positive news is that the GSP Plus scheme would be available to Sri Lanka until there is a reclassification to a higher income status.
Now, a subject expert of investment institution First Capital Holdings will be providing you the usual detailed analysis of the trading of the Colombo Stock Exchange.
With this week, we've actually had a very strong market outlook where most investors are on a very positive attitude. Mainly because if you see the COVID-19 outlook, with the significant amount of recovery starting to take place, we are starting to see the recoveries accelerate, and with that, the investors are also getting used to the overall situation where they are learning to live with the COVID-19, plus there is news of possible release of curfew in the Western Province. And with these developments happening, there seems to be a significant positive attitude that has created to the investors. So with that, we are starting to see a major bull run in the market, and we've seen the market rising by around 400 points over the week. And on Thursday, we saw the market basically breaking the 6,000 psychological barrier again. And on Friday, another 80 to 90 point increase was seen. So we are starting to see confidence levels of investors. Specifically looking at it, it's more retail investors that are more involved.
Moreover, head of First Capital Holdings, Dimantha Matthew, put forward the forecast for the coming week.
Looking at the upcoming week, we believe the positive sentiment that is currently there in the market can flow on to another week. We feel that the investors will continue to go into these mid-cap counters where they are favorites. So basically, things to look at are mainly export-related companies and construction and building material sector. So those are the segments that have a significant interest at the moment. Also, food and beverage sector, which is gathering momentum and increasing. We're seeing increased levels of consumer demand. We feel that is another place that investors can look at. So in the coming days, we feel that these segments will have high level of interest, and the retail sector is likely to continue to dominate the market.
And that's all the news for this week. See you tomorrow with State of Business at the usual time. Until then, take care.